Good morning, traders and investors. A little bit of a different camera angle today. Having some issues with my normal camera, but that is okay. We got my man Dennis hanging out backstage, and not a lot to talk about today. Kind of a quiet weekend on the news front, but I'm sure we can scrounge and find some headlines. I'm just kidding, of course. It was one of the craziest weekends in terms of news ever. And we will obviously talk about what occurred on Saturday, what it means for stocks, Trump stocks, all getting a bump this morning. We will discuss which ones are moving and other implications that we will see from Saturday. So without further ado, let's go ahead and start the show. And we'll catch up with Dennis when I get back. Welcome to Benzinga's PreMarket Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Alrighty, guys, let's check out what the market is doing this morning. The S&P 500 trading up about 0.3%. The Qs also trading higher, and we got the Dow. The Dow outperforming both the other major indices, trading up about 0.5% this morning. Bitcoin, how we doing in Bitcoin world? We are up about 3%, back above the $60,000 level. So if you're in Bitcoin, I know a lot of us are. Good to see that back above 60K. Let's go ahead and bring Dennis on. Dennis, how are you doing this morning?
Head on a swivel. There is rotations, violent types of rotations here happening this morning. And obviously, the Trump assassination attempt is the driver of everything here today. There's stocks ripping higher on the Trump, obviously in the Trump bump that they're getting. And then there's other stocks that are getting hit really hard. We're going to get into all this, but this is a Trump trade day.
Yeah, and I mean, I don't know. What were you doing, Dennis? Like when you saw the news? I mean, walk me through on your side.
The kid was having a summer party.
Your kid was hosting the
Yeah,
party?
he was hosting a summer party. Yeah, so we were like, I didn't even get it until somebody else at the party to see what just happened, and then I go check my phone. I was like, oh my gosh, crazy. And obviously, everybody's going to remember where they were the day that they tried to assassinate Trump. Now, it's unbelievable, and obviously, we're not a political show. We're not going to say anything, but I don't think people on either side of this want to see it come to this. And you wonder, like, there's so much, the Dems and Republicans fighting so much here. I mean, mixed messages, people, will take matters into their own hands. You don't want to see stuff like this happen. You simply don't want to see stuff like this happen. So obviously, we want to give our condolences to the victims, of the family, and obviously even the people who are critical. And then, we're just really happy, obviously, and that Trump is actually still alive.
Yeah, 100%. I mean, there's no place for any type of political violence like that in the U.S. And you did have President Biden hold some form of a press conference and denounce all of that, of course. But yeah, I mean, I went to the Tigers game that day, which was wild in its own right because the Tigers were down like 5 runs against the Dodgers going in the bottom of the ninth, and they came all the way back and ended up winning in extra innings. And I had a few, adult beverages at the game, and it was hot outside. And I got home around like 4 or 5 p.m. after the game and took a little nap and woke up to like a million alerts on my phone and texts. And I was kind of like half asleep out of it. And I was just like, what? Like, am I dreaming? Like and it was just a weird moment to see all of that. And then, like you said, Dennis, of course, glad not everyone, but glad Trump ended up being okay, and
glad there wasn't more casualties too.
Yeah.
I mean, you open fire and the crowd is around, like they were, obviously we hope there's not going to be more because a couple of people are critical condition. But, as far as I know, this morning, only one casualty. When you open fire on a crowd like that, I mean, that's just a scary thought. So it's scary that it's just, that this, it's so, everything is, that there's so much riding on this election. It's so important to everyone. And obviously, again, we don't know motives, but I just think, the hate towards one party to the other. It needs to stop. We need to figure out how to like everybody just get along. Find a way to get along. It's not, we're all on the same team. Obviously I'm Canadian, but I feel like, I'm part of this American team here as well. We're all on the same team here. Just find a way to get along for the next, well, maybe the next 4 years, even if your candidate doesn't get elected. But this morning, the market is clearly pricing in a Trump victory. That is what is happening
Yeah.
here. We are seeing Trump stocks rip higher. We are seeing clean energy like solar get hammered. There's a lot of repercussions to talk about here. So let's get into those repercussions. And obviously, there's going to be some Trump trades happening here.
Yeah, so you had over the weekend, after the incident, you did have, the actual political prediction markets, which there's a number of them out there, whether you're looking at like PreMarket or Predict It, all bumped, all, like you said, Dennis, started pricing in more of a Trump victory, even more so than they were before, which they already were. Now we're seeing the stock market implications. Of course, last night when the early trading opened for DJT, limit up on Robinhood. And other brokerages. You have Funware trading higher as well. I'm gonna throw this out there. Is Tesla now kind of a Trump stock? You did have Elon Musk come out and endorse Trump for president over the weekend. Tesla trading up 4%, so kind of bucking the trend there against other clean energy stocks. And so who knows? Maybe some big Trump supporters are going out there and buying extra Tesla shares this morning after Elon Musk came out and officially endorsed Donald Trump for president in 2024.
Yeah, Tesla's getting the pop. Interesting enough, if we look really in the pre-market action, it stalled out kind of right at that 52-week high, that 271 that we talked about before, or at least the 2024 high. So if you can get the pre-market chart up there, you'll see it. So we are off the highs. I haven't sold any of my long-term Tesla. I will trade it, but in my long-term account, the shares that are in my long-term account, they're staying put because I think there's a long-term story here. It's a good sign, AB, because I think if this happens, a year ago, where we're getting, Trump, like moving up in the polls quickly, I think, clean energy, to your say, is bad for Tesla because, there's government grants and stuff to think about here. But it seems like Musk is almost like trying to befriend Trump here. He's on there saying he fully endorses Trump. Obviously, not, bringing his social media account back to X. I mean, he's basically trying to be friends with Trump here. So, and he needs to be, because it is government incentives, that help Tesla along as well. So with all the incentives, but I mean, moving into the direct impacted stocks here, it's DJT is number one. I tried to buy DJT I have Interactive Brokers, which is the same market maker as Robinhood. I tried to buy it at 8 p.m. open last night. There was absolutely no chance. The stock opened limit up because these after hours platforms have a 20% up rule. So DJT was halted limit up, I think, around 37.40. Also halted up last night was Funware, PHUN, although it's coming off a little bit now, was halted up 20%. That's the limit on Robinhood. And then I believe Rumble was halted up as well, but it has come off the highs, Rumble, and it's only up 8% here now. There's three stocks that are moving directly. GEO is another one that was moving up on Trump. And then, the solar stocks, which is something I'd think about right away too, they're just getting really hit hard. They actually had a really good run last week, Solar Edge coming back. This is probably the worst news for them, that if a Trump election, because we know Trump's not about clean energy and solar, obviously. So you can think about incentives going that way. Probably not going to be a lot of them. So you can see the tan really taking on the chin. It's down 2 points here in the pre-market there. For solar, also down 11 points here in the pre-market. So it's getting hit as well. So that's, the landscape of stocks getting directly impacted. But then you can start going into, other plays as well here. Like the bonds are getting the beats here. TLT is down significantly. I know it's a big run on cents. We're just trying to set the landscape here. And we can jump into some individual charts if you want to. And maybe we should just start with DJT.
Yeah, so DJT, we mentioned was limit up last night, has retreated slightly from pre-market highs of around $54. So it's interesting, Dennis, to me, because like you have obviously this like, I don't even know how to describe, I mean, like the assassination attempt and what it means politically, what it means for the country, but we can talk about what it means for the stocks. And so you have people that are coming in and buying shares of DJT this morning. And if people that came in this morning and bought it, say at, sorry, I don't know why this chart's not loading, bought it at $54 and now they're down on it. I imagine a lot of people aren't necessarily buying it for the money or the trade as much as they are just in
Support.
support of Donald
Mhm.
Trump.
Yes.
And so, will that maybe alleviate some selling pressure? I mean, I'm sure there are people out there that are going to be trading it that don't maybe care as much about the political aspects of it, and they just see it as a trading vehicle. But I would venture to guess that the most of the people that are buying it this morning are people that want to support Trump in the aftermath of this near tragedy. And so you are seeing, we're looking at a 5-minute chart here. You're seeing it kind of DJT perk back up, got as low as around $44. Now trading around $46. But again, when the early market trading opened, this was as high as
It's
$55.
come
So you're
off the
seeing
highs.
a lot of volatility in this stock, and I would not be surprised to see this running. I know we know that this is a high short interest stock
Yes.
as well. So if you have a lot of buying pressure on a stock that's heavily shorted, I don't need to tell you guys what can happen there because we've seen it before. And then as much as the people were behind the GameStop story or behind the AMC story, this is like that times 10. So this will be the one, not the one stock to watch today, but probably the most watched stock today, DJT. And of course, Trump has his own money behind it. I mean, Trump has billions of dollars in this, in equity in this company. I don't know when he can start selling shares. But if this thing does start running, I mean, it would, I think I want to say it's around September. Someone in the chat will
Yeah, maybe
probably
the
help me
chat
out
knows
there.
that. I don't follow it close enough either when Trump's lockup would expire. I will say is this, when it has this pump, it's usually a 1 or 2 day thing, and it usually starts to fizzle out again. And obviously, valuation is an issue. So if you just look at this on valuation, it's definitely a no touch. If you're looking at like a trading vehicle, it's gonna get the pop. It was predictable. That's why, like last night, I was trying to buy it. I was like, I'll pay up like $35 for this thing, and there was just no chance. It halted limit up. You couldn't even get it last night. I mean, maybe if you threw your order in at $50 right off the hop on Robinhood, maybe you get lucky to be one of the people. But I mean, it pretty much instantaneously halted up. So it was going to go a lot higher than the 37.40 that Robinhood was allowing it last night. Then at 4 o'clock opens, and then you have the regular trade, and there's no there's no circuit breakers or anything. It can go wherever it wants. So it obviously opened a little bit too high, maybe at 54. It started to leak. These are usually profit-taking opportunities. Not saying I'm against Trump, not saying anything like that. Like people say, "Oh, it's a selling opportunity." You're saying you're trying to go against Trump, and we're trying to support him. There's lots of ways to support Trump. I'm not going to support him buying, DJT up 50% here today, because I think this is, just probably going to fizzle out again. Now, again, maybe the support continues, maybe it goes up. Like you said, it's high short interest. Maybe they squeeze them more. But usually these are selling opportunities, not buying opportunities.
Yeah, and I mean, what it is just a speculative trading asset at this point, and a way
For
again for
sure.
people to maybe show some support. I mean, it does directly benefit Trump, his pockets, buying this stock when he has. Let me look up real quick what
I think you're
percentage.
better if you're really a Trump supporter, your better use of your money would be to donate to the campaign than to go and buy DJT. I think that's a better way if you wanted to support Trump.
But if you donate to his campaign, I agree. You're supporting him more directly. But if you buy DJT, you have a chance of making money as well. So I understand, I guess, why some people would want to support through that way with the chance of potential return. It is, I mean, you do have to say for DJT, for the actual true social, when you look at the valuation, when you look at the revenue or lack thereof of the company and how many users it has, it
Yeah.
is one of, if
One of
not
the
the
most
most,
expensive
yeah,
stocks on the stock
overvalued stocks.
exchange.
Yeah, 100%
Yeah.
overvalued stock on the stock market. But again, that's, people aren't buying this for the fundamentals or because they think there's a deep value thesis. a la GameStop, Rory and Kitty on this. They're buying it again for the story. And because they support Trump. And I mean, again, like I would not be surprised to see this thing run even more today. You mentioned Funware as well, which of course is a mobile technology company that helped do the campaign app for Trump back in 2016.
That's coming off the highs too. Where did this get to pre-market? Blow
This
that chart
got
up a little bit
above
more.
$10. This got to
Oh my gosh.
$10.35.
It's come
And
off
it,
to big
yeah,
time.
and that's, I mean, this is what I mean. You're already seeing it early in pre-market trading this morning, but this is the problem I think with mixing investing and trading
It is.
with this type of support for groups or politics or whatever it is. You really can't do it. Again, if you want to throw some money behind DJT because you think it's going to run, or because you really you like the story that much and you want to support Trump, fine. But I wouldn't do it with any money that you need, because again, you're buying a company, a stock that's overvalued in hopes that other people keep buying it and keep the price elevated. And in the long run, could all of this help True Social and DJT? Sure. But in the current moment, again, these stocks are still trading at a high premium.
Also, we didn't talk about, and it's a good point from our chat here, Thunder, Psychotropic Thunder is asking about the gun makers, and the gun makers are up significantly here this morning too. We got Sturm Ruger RGR trading up 5.1%. Also, Smith Wesson with this, which is W. They changed the symbol on Smith Wesson so much that I always forget the dang symbol, but it's SWBI, and it's up 6.5%. So it's not surprising that the gun makers, because if you get a Trump candidacy, going to be less gun control, so you don't have to worry about that as much. So Smith and Wesson, RGR are both popping as well. More Trump stocks, and I mean, again, this is the day. This is the Trump bump you're seeing in a lot of stocks here this morning. So it's important to kind of lay out that groundwork here. And the one thing to consider in all these moves and chasing all these moves is he didn't win the election. It's not over. But, he obviously moved up in the polls, and it just put it's going to be hard to beat him now. I tweeted out last night, it's going to be very hard to beat Trump now. There's going to have to be, obviously, I don't personally think Biden can do it. I don't know if they're going to get another candidate. I don't even know if they're going to do that now, but you can see in the polls, it's going to be hard to beat him now. So, but the market, some of these stocks are pricing in full victory here. That's why I don't think I'm chasing here. I don't think I'm chasing the gun makers. I don't think I'm, shorting the solar stocks down 5%. I've never made a lot of money chasing stocks over my 25-year career. So like buying stocks like DJT up 50% and shorting solar stocks down 5%, buying gun makers up 6-7%. I've just never made a lot of money chasing. So I'm not going to be the person to do that. If you need to do it, I think do it with caution.
Yeah, here's from Predict It, which is a website where you can kind of trade. It's like the stock market, but for politics. And you can see here. Oh shoot, it's making me hold on. I can't even click this without logging in. Let's see. Hold on. Oh, here's the chart. So you can see here on the chart. If we go to the 30-day chart here, this top line is Trump, and if you go back to a month ago, end of June, it was pretty close. Trump 51 cents, Biden 48 cents. Of course, you had the debate. That's the big drop here for Biden. And then this is after, this weekend, in the last 7 days, Trump's odds have gone up even more. And so, I mean, that's an even more direct way to trade this, because we're talking about all the stocks that will move or that are moving in anticipation of Trump winning. There are ways to, I guess, trade the actual election outcome more directly here. But I mean, like you said, Dennis, I mean, it's no matter what you look at it, polls, how people are talking about it, how people in DC are talking about it, it seems like everyone is pretty much anticipating and predicting a Trump victory, and frankly, not a close one in the upcoming election.
Right now, yeah, it's changed, and we get that. I mean, assassination attempt. Reagan jumped huge in the polls when they tried to assassinate him as well. I mean, they get, obviously sympathy vote here is going to be coming across here too. And there's, but again, we can get into this. Let's cover some other stocks here, because we do have two major earnings reports here this morning too. Goldman Sachs reported earnings about an hour ago, and the stock is been kind of quiet. It moved, initially popped and dropped, I think. Now we're back to flat here on Goldman Sachs GS. So give us those numbers here, AB, and then we'll try to break down the technicals.
Goldman Sachs reported EPS of $8.62, beat the $8.35 estimate. Sales came in at $12.73 billion, beat the $12.46 billion. They increased dividend from $2.75 to $3 per common share. So, double beat, increase the dividend, and the stock, to your point, Dennis, is pretty flat. Quiet. I
Show
mean,
that pre-market chart, AB, just so we can get a feel, like blow it up a little bit here so we can
yeah.
see it. Yeah.
You wouldn't even know really from looking at the chart that the company reported earnings this morning. Let's go to a
Very
1 minute
muted.
chart here. I mean, looks like popped higher right on the report to around $490 and then came
Yeah.
back down to 475 and now has found its level at the previous level, right at around $480. So Goldman, good report, raised a dividend, stock not doing much. Is that a sign to you, Dennis, that maybe when the market opens, we could actually see some weakness in the stock, that it's not getting any sort of love after a decent report?
I don't know. We did see, obviously, we have precedents here because we had a number of banks report last week. Wells Fargo opened weak, did not bounce at all. JP Morgan opened fairly weak, but did bounce. And then Citigroup opened strong and sold off. What we historically have seen is some of these bank earnings, they applaud them off the bat and then they just roll over. That's the history behind it. But I mean, you're 4 or 5 majors in here now, so I think it's more of a coin flip on whether they're going to buy or sell Goldman Sachs. I'm not making any bets here. Some pitches are up the middle, AB. This one's a curveball.
Yeah, and again, like you can look back at last week's price action on Friday from the bank earnings as a little bit of a, we'll see if Goldman kind of follows suit there. What was the other earnings report that you wanted to check out?
BlackRock, BLK reported earnings here this morning, and it's not moving either. So same story, very muted response here. BlackRock's quiet.
Yeah, BlackRock came in, EPS came in at $10.36, beat by 40 cents, revenue of $4.81 billion, beat by 30 million. So, I like pretty much, we're still in this market, Dennis. I think that you need to beat substantially and raise guidance if you want to get because I mean these all the stocks, or pretty much all the big boys, are trading at hefty valuations, trading at expensive premiums as is. So unless you get that double beat and raising guidance, it's not surprising to me to see some muted responses to the earnings, even though when looking at the top line, they look pretty good.
So moving back, so those were your 2 earnings reports this week. We're going to get some other ones too, just to quickly go through the earnings count. I don't know if you have one to show, but I can quickly just give through the names. Bank of America, Morgan Stanley are tomorrow. There's really nothing tonight. Very quiet night tonight. But Bank of America, Morgan Stanley, Charles Schwab, UNH tomorrow. Wednesday, we're going to see Johnson & Johnson, ASML, UAL, and Alcoa AA. Thursday, we get the big gun Netflix, and a lot of people are going to be watching Netflix this morning. It was trading up earlier, and it has leaked away here as well, and now Netflix has indeed moved to the red here. So big tech, mega cap tech not having a great morning here. We got Netflix down, Amazon down, Google down, Meta down, Microsoft down, Apple bucking the trend, and I don't know, Apple's up over 2%, so it's really moving higher here. Obviously, we've already talked Tesla, and we know it's moving as well. But you can see some money coming out of mega cap tech, because that's the trade that's been working, and kind of moving into a lot of other names. A little broad-based rally here this morning. So actually good to see the breadth still expanding out. But yeah, big moves here. But if we just preview Netflix, obviously going to report here on Thursday. The stock has been selling off here the last 3 or 4 days ahead of it, which is counterintuitive. Usually they get the run up ahead of it, but we haven't been seeing that. We've been seeing a little bit of weakness in mega cap tech, though, with the IWM strength. So it's more of a macro thing as opposed to a Netflix thing, recently anyways. So, and then also on Thursday, we're going to get Taiwan Semiconductor, which TSM is trading up here as well in the pre-market, and it's been running too. So those are some big reports we're going to see this week.
Yeah, it looks like Apple did get an upgrade from Morgan Stanley, maintained an overweight, sorry, not an upgrade, but a price target increase from $216 a share to $273 a share. I don't know if you did that on purpose, Dennis, but you said a lot of people will be watching Netflix. I like that.
Ah, no, I didn't actually. There's sometimes
um,
these puns come out unintended.
Unintended, no pun intended, but it still worked. Yeah, and I mean, that was the story, the rotation last week. We saw after
Was.
the CPI report that all of these big tech stocks. I mean, if you were well, Qs are still trading higher. What's pushing the Qs? I mean, Apple is obviously huge. Oh, Apple and Tesla probably has
Apple and
been.
Tesla are helping the Qs big time here this morning. And you've got, Google did a deal which we haven't talked about as
Yep.
well, and in cybersecurity. Maybe we should take 5 minutes just to talk about this deal here that they did, because there is some repercussions just thinking out through, cybersecurity here. And some of the other cybersecurity stocks are down a little bit here this morning because it looks like competition for them from Googmeister. Give us those details here, AB.
Yeah, so Google is in advanced talks to acquire cyber startup Wiz for $23 billion, which would be Google's largest acquisition ever. Google's got a pretty good track record with acquisitions. If you look at, obviously YouTube was a big one that I think they
They're good
bought.
at it.
Yeah, they're good at it. And then I think what was the other one, like Smart Pay or something like that. Google had one for like an online advertising thing that has done really well for Google in the long run. But anyway,
And YouTube is just unbelievable. There's never
Wiz,
going to be a better deal than YouTube.
I don't know. I mean, I've honestly never even heard about this company, Wiz.
I don't know them
But
either.
whoever founded it and then has been running it has clearly done a good job, because Wiz was founded in 2020. So it's less than 5 years old as a company. And then you're going to exit for $23 billion to
Not
Google.
bad.
Not bad in 5 years, Dennis. If you can build a company and sell it for 23
Let's
bill
do
in 5
this.
years.
Let's do
Yeah.
this. Cybersecurity. They're in the right business here. So
A lot of
Google was trading up earlier on it. It has rolled back a little bit. I have a small trading position in Google. I don't know, like CrowdStrike, Palo Alto Networks were weak coming into this. Do they continue now? You get a little competition, cybersecurity from the Googmeister. Does this, follow through here? Interesting. I mean, they're barely down in the pre-market, so they don't seem to care, but the charts aren't that great. As much as CrowdStrike chart looked good a week ago, and we talked about it looking good, like a good setup if it was going to break out through 400, it failed. And now, it's caught a few people here. So, interesting double bottom we had from the last couple of days at 367.50. I would say if you could get below 365.59, then you start getting into this gap and you start thinking about it down to 350. So there's a 15-point gap in the chart there too. So, and obviously, this turn in CPI has not helped the cybersecurity stocks here either, because those have been winners no matter what. And we know they've been rotating out of leaders into laggards. Cybersecurity has definitely been the leaders, and the laggard trade is on right now. So lots of things set up here to not make me feel like buying CrowdStrike today.
Yeah, and a lot of times when there's acquisitions, you see the company itself that's doing the acquisition trade lower because people are worried they're going to have to sell shares to do the deal. Google is such a massive company that it can finance the $23 billion deal, no problem whatsoever. And people are probably more looking at the implications. You also had Cleveland Cliffs set to acquire Canada's Stelco in a 2.5 cash and stock deal. And to my point, because that stock is involved in the deal, Cleveland Cliffs trading down on the acquisition about 2.3%. To me, like watching this price action on acquisitions, like it's so short-minded, because instead of people looking at, okay, what's this acquisition going to mean for the company long term? And obviously when a company's going out and acquiring another business, they think it is going to help their business in the long term. But investors and short-term traders see, okay, they're gonna have to use stock to do this, to do the acquisition. I'm gonna sell some. And you did see Cleveland Cliffs.
What they do.
Yeah, I know. I mean, it's the difference between people that are long-term investors and short-term traders in the market, and then you see that they kind of battle with each other until you find that equilibrium. And I think if you're a big-time Cleveland Cliffs bull and you think this is great for the company long-term, you're happy to buy the dip on this. And if you, and a lot of times if you're buying stock in a company that you like long term, it's because you like the management, you like the leadership, and the leadership's the one making these decisions on these acquisitions. So You saw the stock dip to about $15 and has come back up to 15.80. But again, you're still seeing it sell off about 2.3% after this deal was announced. Do you know Stelco? I don't. I'm not really that familiar.
I've heard of the company, but I don't trade it. So no, I don't.
You're not in the steel business. You're in the
No, and
digital
everybody
business.
thinks like I get this all the time when I have Canadian. I have a lot of people ask me questions about Canadian companies there, and I trade U.S. markets. I hardly trade the Canadian markets. I know the stocks, especially the interlisted ones. Obviously, the big banks. I know of the companies, but I've never been a big fan of trading on the Toronto Stock Exchange. I just trade over here.
I have a.
I'm not even sure if where that trades even Stelco. Is that a private company? I'm not even sure. I don't know the company at all.
I'm not sure either. I have kind of a more lighthearted story to after after we open the show talking about assassination attempt and all the implications of that. Speaking of the U.S. Canada, Dennis, I don't know. I mean, you know how big of a deal football is in America, right?
Oh yeah, it's a big deal in Canada too. We got the CFL.
CFL, the Argonauts, right?
Yeah.
Yeah. See, I know the Grey Cup.
Oh yeah, you know it.
Yeah.
The Rouge.
Yeah. See, so
And
we're
everybody's
talking
like,
about
"What the hell's a Rouge?"
the ads. So we've adjusted the ads, Easy Mike, to where it's just one, and it should come around 8:30. So if
We get
it's
one ad. Yeah, we had and it's something that we're. Again, you can talk about it, AB, if you want.
it's
But
it's more of just a thing we're testing right now, and so don't think it's going to be a permanent thing. We were obviously listening to your feedback, and we did make note that last week when we had some big 8:30 numbers come, and that it wasn't the right time for an ad, so we will adjust that moving
let's
forward. So
adjust that away from 8:30. Good point, chat.
yeah,
They're making us put one ad in the show, so at this point in time, but this may change again here too. So the one issue is the show is free. We have to be able to keep the show free. So we're trying different ways, obviously, to keep this show free for you guys.
Yeah, and I know there was a couple shows where it was a little bit overbearing the ads, and we've scaled back from that. So, all right. Well,
I think we'll talk to them about moving the 8:30. Maybe we can move it to 8:35 or something.
Yeah, what I was gonna say for my lighthearted, and this isn't necessarily a real trade idea, but it's something that I've been thinking about. I got to work this thesis out, but I figured this would be the best place to start talking it out and hearing some chat feedback. So, football, big deal in America, Dennis. Not just the NFL, but college football is absolutely massive, a massive business here. The new video game for the NCAA. The game, I believe the last one was NCAA 14, about 11 years ago. The new NCAA football game that they're able to remake now that they figured out all the NIL deals and whatnot is coming out this week, and it is one of the most anticipated video games in the past decade. If you want to go like GTA 5 or GTA 6 when that finally comes out, which by the way I haven't looked at Take-Two in a while. This new game is coming out, Dennis, and the reason I'm bringing it up is because it is only available on the newest model of the consoles, which is, PS5 or Xbox One, whatever it is. I don't play as much video games as I used to, but I still have a PS4. And I'm like, oh man, do I have to go out and buy a PS5 so I can play this, video game that I grew up playing that I really want to play? And I don't think I'm going to be the only one that's going out and buying a brand new PS5 just for this game. And I think if you wanted to maybe potentially try to play this, or we'll see the implications, I would much rather play Sony rather than Microsoft, because Microsoft is just such a huge company that I don't think really Xbox console sales mean that much for Microsoft. I mean, with how much money the company brings in through Azure and the cloud and everything. I mean, you look at Microsoft, it is holy cow, a $3.4 trillion company. Meanwhile, Sony, also a massive company with a lot of different moving parts, but only $100 billion company. So it's about 1/30th the size of Microsoft. I'm not going to be the only one going out and buying a brand new PS5. And of course, for a while, the PS5 was impossible to get. During like Christmas time, Target, everywhere was sold out of them. I think we're going to start seeing that again, where PS5s are going to be hard to come by.
So who makes this game? Is it Take-Two, you said?
No, it is EA Sports.
Oh, EA is making it. Why not just buy EA? Should we just be buying EA? When's this game coming out?
I think today maybe. Someone in the chat help me
Is
out.
it today?
Oh,
I'm not a gamer, so I
sorry.
don't know when the games come out. I
That's
will say the EA chart, if you bring this up on like a 7 or 8 year chart, it's been in consolidation station for 5 or 6 years here now, like between this 120 and 145. It always seems like it's between 120 and 145. This would be one of the biggest breakouts. If this could get above 150, this would be one of the biggest breakouts that you'll ever see. So I don't know if it's going to do this, but it's been in consolidation station and moving higher here. So maybe it's the excitement of the games. And typically when these things launch, they get the run up ahead and then they show weakness after. We know we like the event trading. We go with that. But one thing to consider is EA has been a long period of consolidation.
Yeah, I mean, you're right that if you wanted to play this, EA is probably the better way to play it rather than Sony. But I've like in times in the past I've played Sony like earnings based on PS5 sales and stuff like that, and it's worked out. But all right, I just wanted to throw that out there. We do have our special guest of the day hanging out backstage. So without further ado, let's go ahead and bring Dave Lauer on Benzinga's Pre-Market Prep. All right, Dave Lauer of Urvin Finance.
Hey,
Dave, how are you this morning?
good. How are you guys doing?
Good. Well, it certainly wasn't a quiet news day to start the week. And, we have a lot of different stocks moving, but I don't want to drag you into that conversation, Dave. So I'll throw it to you. What have you been watching? What's been top of mind for you?
I don't know. It's been a quiet summer for me, so I've been
Dave's
enjoying it.
always busy. And he's a new Canadian too in the last couple of years as well. I don't know
Yeah,
if you
that's
realize
right.
this, Save B, but he's one of those immigrated from the States, and he's moved here to Canada, and he's experienced some of those cold winters we have here too. So, but Dave, I
Some of us
actually
did
am
flee the
going.
country, yeah.
I do want to bring you back into this conversation because I wanted to talk to you about your thoughts here, not so much on DJT itself, but on the circuit breakers, because we've been talking on Twitter about
Yeah.
this for a while.
Oh, man.
And
Yeah.
obviously, after the flash crash of 2010, they adopted these circuit breakers where the stocks halt, and there's different rules depending on the market capitalization and which stock, which tier group they go into. Some stocks
Yeah.
move 3%, then they halt them for 5 minutes. Some of the parameters are bigger for other stocks here as well. But what we see, on these smaller stocks, especially GME, when it's moving, is it trades pretty good pre-market because there's no circuit breakers, and then all of a sudden it opens and they halt, and then it opens and they halt, and they opens and they halt, and we've seen these halt 5, 6, 7, 10 times here sometimes, throughout the day. When the trading in the pre-market is fairly orderly, and I don't know if DJT is going to do the same thing, but I'd imagine it may today, where it's been pretty orderly here in the pre-market. Regulators, please take note of the orderly trade right now, because once that 9:30 bell goes, they seems to, like, these halts, they seem to be doing more disruption than they're helping. What are your thoughts here?
Yeah, so I think that's a great question, and it's funny, like if you look at this DJT chart, for example, I can't really tell just looking at it whether it would have halted at any point in that movement, but I suspect it would. Like those are some pretty sizable moves, and yet, right, it has, as you're saying, Dennis, it's continued to trade in an orderly fashion, and you see the same thing, with GameStop pre and post market during its big moves. And then it opens up and it's just halt after halt after halt, and it's nuts. I think halts, the way that they have been implemented, and I've said this for a long time, is I think it's regulators trying to address a symptom rather than the underlying cause of these liquidity issues. And so to take a step back, the way a stock is halted is that if it's a security that has closed above $3, it's considered a tier 1 security, and then during the market open and the most of the trading day, so 9:30 to 3:35 p.m., there's a price band in place at 5%, and then from the close period, which is defined as 3:35 to 4, that band widens to 10%. And so when you what the band is based on, though, and this is a really important detail, is that it's the trailing 5-minute reference price. the average, the arithmetic mean, the average reference price. And so a lot of people see stocks halt or not halt, and they're saying, oh, these are being manipulated, the people are deciding to halt or not to halt, and that is absolutely not the case. What is happening is that these triggers are in place. This is an automated system, and it was put in place, as you're saying, after the flash crash, because regulators saw that there was a problem with what at least in academic terms is referred to as illiquidity contagions. And these illiquidity contagions, that's what the flash crash was. But we saw many flash crashes repeatedly after that, and we still tend to see those types of things. And so what they tried to do was they tried to say, okay, well, if a stock moves a lot, let's stop it from trading, and let's give the market a chance to catch up. And what the point that they're sort of missing is that the reasons that we have these problems, as I think you and I, Dennis, have talked about for a long time, is a lack of diversity in the market. Right? Everyone's trading the exact same trading algorithms, especially from a high frequency perspective. And so because of that, you have the self-similarity in markets, and it just leads to these feedback loops. And so, I don't think these are a good thing for markets. And I see a question, and I get this question a lot. I see a question in the chat here about the halts during the Roaring Kitty stream. And, I've seen that question a lot. And if you look at the data, every halt was based on those automatic triggers, and it was based on these rules. And if he was trying to show anything by trying to get it to halt, and I don't know, I think that's a pretty big leap to say he was doing that. But if so, it's that, like, these mechanisms are not working, and it's messing up markets more than it's facilitating orderly trading. So I've been in favor of getting rid of them and addressing the market diversity issue, which, when you allow large hedge funds and market makers to write all the rules in the market, you end up with a market that looks like what we have today, which is one that's run by a very small group of large market makers and hedge funds. And I think that's a problem for US markets.
Yeah, and the counter argument is, hey, though we haven't had a major flash crash since 2016. I'm just playing devil's advocate because I'm on your side, Dave, but I'll play the devil's advocate. And liquidity works, 99.9% of the time here fairly well and functioning. Should we just not worry about these 0.1% of the time and let the markets just continue to function? I mean, stocks are at all-time highs. How do you get anything better, Dave, than stocks at all-time?
What more do you
How
want?
can we possibly have better markets?
We can't change markets right now. They're working so well. Best markets in the world, right?
Everybody's making money.
Except they're not. They're not the best markets in the world, which, it's easy to sort of cover things up during a bull market like this. But if you look at other markets are more efficient at executing larger orders. And the thing that I think is really important here is, it's, if you look at the data, if you look at the studies, in fact, one of the interesting studies that came out of the tick size pilot showed that in the kind of market we have, which is not very competitive, and which has a huge amount of off-exchange trading, you have a much higher incidence of extreme price movements. You have much higher individual single stock volatility, and realized volatility, and you have less liquidity. And so it's all sort of great as things are moving up. And then as soon as they're not, as soon as that escalator turns into an elevator down, watch out below, right? It becomes violent, it becomes, and it overshoots dramatically. And so, I think we have seen that even during this bull market. Plenty of examples of that, plenty of examples of a total lack of liquidity in certain names. And I think the time to fix it is now, while things are good, before they get bad. But that's a silly view to express, and that's not how DC operates. So why do I even bother saying it?
Another argument that I've made is you have a lot of liquidity in the mega caps because you have so many other, there's a lot of participants, even myself, I trade that. I avoid the small cap trading like the plague, and people say, why don't you trade more small caps? You want to know why? Because the liquidity isn't there. I can't get in and out easily. And if I'm a long-term investor, sure, I guess you could invest in a small cap and you don't mind paying a 1% spread. But if you're a short-term trader, you're paying a 1% spread. I mean, all of your edges are gone if you're playing in and out and trying to get in and out of these stocks. And they'll say, well, small caps have always had wide spreads. That's just the way they are. But I know you've made this point before, is that we've went to electronic markets and saw so much benefit, to extra liquidity in the large caps, but small caps haven't seen that same benefit. And I think off-exchange trading is a big reason why.
It's the primary reason why, and they've been completely left behind. And when a market maker goes to the SEC or to Congress and shows them a bunch of statistics, or a retail broker shows these statistics about all this price improvement, all that price improvement is concentrated in a tiny set of high liquidity names that anyone can provide liquidity in, right? It's all BS. It's all ridiculous, bad faith arguments, and then they say, oh, and we use that the profit that we make from the high liquidity names to cross subsidize liquidity in smaller names, which they don't. And in fact, the SEC's research on the order competition rule showed that they're not giving good fills in lower liquidity names. There is not actually any cross subsidization taking place, and we've just completely left behind that part of the market, and it's going to be a big problem economically for people, right? This leads to corporate concentration. It leads to the bigger companies getting bigger and smaller companies not being able to raise money at beneficial terms, not being able to grow, not being able to compete with these bigger companies. And that's a huge problem for everyone. It's a big driver of inflation. And I think people should care about these issues, and we should strive for markets that are much more geared towards liquidity in small cap names on exchange with the types of spreads that you would expect to see in the biggest market in the world.
So actually, when we look at even longer term performance, and this gap between small caps and mega caps keeps widening and widening, and we can say it's technology, and we can say these companies aren't doing very well, but maybe a little piece of its market structure as well, where these companies can't raise the capital to smaller caps, and maybe you're seeing this reason this happening is that there's just not institutional interest in these stocks because they can't get in and out of them. Like I have trouble buying 500 shares of some small caps. I can't imagine buying 500,000 shares or a million shares. So there's not as much interest. So maybe this gap that's continuing to widen between small, like people saying, well, how do we get the small caps to catch up? Maybe we got to look at market structure more.
I mean, I agree. I think like we want a vibrant competitive economy, and we want our markets to be fueling that. That's sort of the underlying premise of capitalism, and it's really dysfunctional. It's not working. And when these names have less liquidity, they become targets for abusive market manipulation, and that can include pump and dumps and short selling, short selling manipulation, all of that. It becomes much easier, and companies like biotechs and energy companies become prime targets for that kind of thing, because they need to continue to raise money, and they can't access markets when they're manipulated, and they can't access markets when there's not liquidity.
What about the tick sizes? So they're talking about changing the tick sizes. They brought this up last year. I haven't heard too much like an imminent change coming here, Dave, but do you have any updates, on these buckets? Like, I think they were a little bit aggressive on some of the buckets. Some of the buckets, I think you were saying were okay. What are your thoughts here, and what's the update here on the tick sizes?
Yeah, I'm surprised that we haven't had a final proposal yet. So the idea was, right now in markets you have a minimum quoting increment of a penny. So you cannot enter an order at sub penny and display that on an exchange.
Unless the stock's under $1.
Unless it's under $1. And you can there are certain ways to get around that. For example, you can have midpoint fills on certain exchanges, and then off exchange, they can print it at any price. They can print a trade at whatever price, and that's why you often see 4 decimal places on, if you're looking at the time and sales on the trading of a stock. And so the SEC recognized that, one, that leads to an imbalance between off exchange and on exchange. So it favors the off exchange trading venues, and we don't want that. We want more trading to take place on exchange in order to improve liquidity and price discovery. And so what the SEC proposed was a pretty aggressive set of quoting increments that would go down to a half penny, 20 mils, and 10 mils. The industry generally, and even our organization, which is a grassroots organization of retail investors that advocates in DC for market structure change, called We the Investors, we said that's a bit much. Let's go down to a half penny. But much more importantly, let's harmonize trading increments on exchange and off exchange. So let's stop giving an advantage to the off exchange space. And so my take is they're going to do it. They're going to go down to a half penny. Initially, they were talking about having a tenth of a penny, a 10 mil trading increment. So you would no longer be able to have trades at 4 decimal places, for example. But there's still a chance they say, the trading increment and the quoting increment are the same, half penny. There's a carve out for midpoints. You can print it, 25 mils, and that's it. That's what I hope they're going to do.
Yeah.
But anyone's guess is as good as mine in terms of when that's going to happen. Supposedly that was going to happen any month now for the last 6 months. So, the SEC is moving slow, and I think they're trying to make sure that they can get past a court challenge, because now whatever the regulator does gets challenged in the courts.
Dave, just going back to, I guess the efficiencies or inefficiencies of the market, I think a lot of people would look at Nvidia's price action of the last year and say, how efficient can the market be if you have $1 trillion company, tripling in a year? And then other people might say that's the market being efficient because the market's pricing in, future growth of the company and revenue increasing. Where would you kind of stand, I guess, on that viewpoint of just looking at, again, Nvidia's stock price over the last year? Is this a sign of the market being efficient, or do you think a sign of inefficiencies?
I think it's a great question, and it's a really hard one to answer. I mean, if you look at Nvidia, and Dennis, I have had this conversation a couple of times too. Like, if you look at the forward PE, it's not crazy, but it's pretty high. But it's nothing insane. How much of a difference does sort of what we're talking about make? And I would say it makes a significant difference to individuals who are trying to buy Nvidia through their retail brokers. And it's every time you buy, it's costing you more than you should. From a price, but I think what you're talking about is price discovery, and you're saying, is the market efficiently finding the right price for this stock? And when you look at that chart, I mean, when I personally look at the chart, I find it hard to believe that is not a bubble that will at some point come off. But
It's a scary looking chart.
It's a scary looking chart, and it looks like a blow off top, and it looks like everything you would think that you pull every comparison to the .com charts, and you see very similar things. And I think from an AI perspective, personally, I think AI is quite overhyped, and we're going to run into some real issues, and already have. And it's sort of just like the shiny new thing at the moment, and it might eventually revolutionize everything. That is absolutely true, but I don't think we're there at all from a technological perspective. And so, I do think that if you have a market in which liquidity is not as robust and diverse as it can be, and everyone piles into the same trade, you can end up with something like this, in which the price discovery mechanism becomes, kind of fundamentally broken. And then who knows where it will end up eventually. Once things sort of, the market tends to catch up, right? And it tends to figure things out. And short term it can do anything, but long term it tends to be reasonable. So, I'm not optimistic about the way the market is operating today, given what I know about sort of the microstructure of it, as well as sort of what I know about AI, and what these companies are being valued at. But
Yeah.
someone just said, sounds like this guy doesn't own Nvidia. I sure do, man. It's been great.
Did you sell your Nvidia yet? Have you sold any?
I've not.
He's had Nvidia actually the whole way up.
And I'm thrilled that I did. But it's hard because I tend to. It's almost like crypto. So I almost look at this like I can look at crypto. Every time I've sold crypto, I've been wrong.
Just don't sell.
Yeah, right. I bought my first Bitcoin at $2 a Bitcoin, and I of course sold it.
Wow.
So,
I thought I was early. I thought I was early at 400. Dave, we have to wrap, but before we go, I wanted to give you an opportunity to talk about Urvin real quick and let us know what you're doing over there.
Yeah, come check out Urvin.finance. We've got a platform for individual investors. It's sort of a great data and tools, and a social platform. And we've solved the bot problem on social platform for investors. You can connect your brokerage account, and that verifies that you're an actual person, but it also shows us what stocks you own, and that lets us connect you to people who own those same stocks, so you can talk about them these stocks in verified shareholder communities, and then you can also connect to the companies that you invest in. And we think that's probably the most exciting part of what we've built, is connecting public companies with their investors directly, disintermediating all of these middlemen in markets, and that's sort of our mission. So, check it out, Urvin.finance. Thanks
There
for
you
having me on.
go. Well, Dave Lauer from Urvin.finance. It was great to have you on. I know this was our first time talking, but I've learned a lot from this session. Might need to go back and watch it one more time because we touched on a lot. But Dave, thank you for hopping on Pre-Market Prep this morning, and we'll chat soon.
Sure, thanks.
Thanks, Dave.
Alrighty, that was Dave Lauer again. Urvin.finance. If you want to go check that out, maybe Elon needs to contract Dave to help figure out the bot problem on X, because it's been a couple years, and that's been something that hasn't been fixed, that was promised when Elon took over there.
It got worse.
It's
The bot
gotten
problem is
worse.
really bad on X. I know freedom of speech. Those bots are really using that freedom of speech, man.
Hey,
The bots are all for freedom of speech.
freedom of speech was not solely for humans, I guess, for bots as
Yeah, it's
well.
for the bots.
All right, we've got about 4 minutes left. I did see someone in the chat say that the Macy's deal fell through with Brigade Capital and
Wow, surprise, surprise.
you say surprise, surprise, Dennis, but you don't sound that shocked.
Yeah, and I played this a couple times. I was in it a couple times for the bounce, and I actually did really well with it. And I'm just like, it's been going on too long here now. And like I said, I think if they, do a deal, it's at 24.25, so some upside. If they pull the deal, it's going to get killed, because we've seen, a lot of the other retail stocks have come down fairly substantially in the last little while here, and Macy's held up, although Nordstrom's holding up here well now too. But they got the potential. They were talking about going private, so which they've talked about before too. So deal falls apart on Macy's. One thing you got going for you, Macy's shareholders, we're in a little bit different environment than we were. Small caps are starting to look a little bit better. It's funny to call Macy's a small cap, but this retail trade, some of these laggard trades, I shouldn't say small caps, but laggard trade is starting to work, and Macy's has been a long-term laggard. So I wouldn't be surprised if the dip actually gets bought here today on Macy's. It's a pretty violent sell-off. A lot of your risk arb traders who were in there are the ones selling here this morning, getting out, moving on, taking the loss. But there's still some value here in Macy's. I'm not saying this is the best long-term investment, but I wouldn't be surprised if this thing bounces back, not all the way, but I wouldn't be surprised. I don't think this is going down 15, 14, 13. This is over here. I wouldn't be surprised if people do emerge here at 16.75 and take a shot.
Yeah. I mean, and when we have these rumors of acquisitions and buyouts, like the quicker it happens, like the more it drags on, to me, it's like, always bad news, and so much that can go wrong in terms of, obviously, in this case, on the actual deal side, with the investors coming in and having talks with them. And then in other cases, more so in big tech, you have antitrust concerns.
Yeah.
But like going back to the Google Wiz thing, like if you're really bullish, that like you want to see that deal get wrapped, which is a little bit different because Wiz is obviously not a publicly traded company. So, but again, like if you're trading the mergers and acquisitions and you're trying to get that ARB and stuff, you want to see those deals go through quickly. And the longer they drag on, just the higher percentage.
It is. Yep. The longer they drag on, this is dragged on too long. Eventually, they're just not going to make a deal. They're like, we can't deal with this board. We just can't make a deal. We're just going to pull it. So the more these deals drag on, the more risk they are. And, if you're sitting in here saying, wow, there's value here, maybe it's about up, there's still value in Macy's, I think. Like, obviously, we've talked about the real estate, but there's no AI in Macy's, we do, I was saying the other argument, last week, perfume and, everything, and high-end apparel and jewelry. I mean, a lot of stuff they sell just isn't in, as much fashion as it was maybe 25 years ago. So it's definitely a company. If you walked into a Macy's, here's a question for you. If you walked into a Macy's 25 years ago and walked in one today, are they that much different? Did they really change the stores? I mean, we've come a long ways in 25 years, and stores have adapted and changed and stuff. Macy's feels like I remember going there as a kid. And, I go there like 2 years ago. It feels like the same dang store. There's a failure to maybe innovate here. Like, you don't see Macy's online, like, it's sure they have it online, but you don't hear anything about it.
Well, yeah. I was gonna say, I actually was just in a Macy's last week, like solely because I went to the mall and parked outside, like the Macy's in the parking lot, had to walk through the Macy's to get into the mall. But I was thinking about that, and like obviously e-commerce has taken off, and the companies that have adopted e-commerce are the ones that have done well in retail. But I don't think people are going to Macy's e-commerce as much as they are the individual brands. Like if
No.
you want to buy a Ralph Lauren shirt that you could get at Macy's, and instead you're going to buy it online, you're probably going to go to the Ralph Lauren website as opposed to buying it from Macy's website. Just
Yeah.
my hunch there. I don't have data in front of me, but I mean, the Macy's store was still nice, and it actually was, I will say, kind of busy in there the other day, Dennis.
Well, that's
So
good news.
yeah, and it's such a big department store that, like, I see someone in the chat saying it's an old lady store. Like, they have different sections. There were some, they had like the Nike section that was like, oh, I could find some stuff in there that's pretty cool. But either way, deal falling through here for Macy's, stock trading down. Someone in the chat asked us, and it's 9 a.m., so it's time to wrap up. But Scott Jeffrey says, how about a nice summary statement about where you guys think the market is going to go today? So, Dennis, dust out that crystal ball and let me know what you think.
Here's what my thoughts are here. And IWM has had a hell of a rally for 3 days here. And it's up here again because they think Trump's good for business, going to be good for small caps, going to help here again. The TLT has always been my lie detector test. Maybe, you're seeing TLT down. Obviously, Trump effects here too. You could talk, there's different reasons why the TLT would be down, with Trump, but I think that's, the reason it's down. More conservative bonds, worried about inflation creeping back in. If we're going to go big business, inflation creeps back in, not good for rates. So those are some thoughts why the TLT is down here today. But usually TLT being down this much is not good for small caps. So I've actually been selling some IWM into this rally here. I'm not saying it's over. I'm not saying the rally is over. Obviously if inflation is beaten, which it's not, but if the bull BS CPI data is going to continue to show decline here, then we're going to get the perception, the market's going to get the perception that's beaten, and rates can eventually go lower. That's good for small caps. But I think today we've had basically a 10% move in 3 days for small caps. Not 10%, 7, like 2 and 20, 7.5% in 3 days, a big move. And I think today would be a good day to take profits. So I'm actually a fader of the IWM rally today.
There you go. Yeah, I would be watching Qs are probably the one thing I'm watching today to see if we can get that bounce back. We talked about it earlier, trading higher this morning, but basically just on the backs of Apple and Tesla. If we continue to see some weakness in the other big tech stocks and IWM strong, to your point, Dennis, it could be, a sign that this that rotation is continuing. And, a lot of people have been calling for a while for small caps to catch up and outperform the big boys. We haven't seen it, but we have seen it the past 3 days. So this week, I think, will be a big test for the IWM and a big test for big tech as well, because when those things sell off, and we saw it back in 2022, you go back and look at something like Meta's chart, or, you look at any of their charts, really. Meta was one that drew down, I want to say, like 70%. But when these big tech stocks sell off, they can sell off quickly. So I'm not saying that's what's going to happen this week. But, I'm just am watching those names and seeing if any weakness there continues. But all right, thank you to everyone who tuned in to Pre-Market Prep with us.
Great show. Dave Lauer, always a pleasure to speak with Dave. He knows so much about market structure. He's been coming on this show for a decade. We love Dave. So, yeah, great show, AB. Joel, we miss you. He'll be back.
He'll be back, yeah, at some point.
At some
I don't know.
point.
Yeah, I don't know the exact
He's taking a little
timeline there.
R&R.
Yeah, a little R&R. Tomorrow will be a T3 Tuesday, so make sure to come back, hang out with us. 8:35. We'll get another great guest from T3 on. Break down tomorrow's price action as we head into the open. Hope everyone stays green and has a great day. We will see y'all tomorrow.